Hello. Okay, so we start our webinar. I hope that all the technical points are fine, and we crop this beginning from the recording. Once again, I'm happy to see all of you in our first part of building a naked trading strategy series. My name is Rowan, and before we start, I would like to learn a little bit about you. So please write in chat about your level, background, and trading skills, perhaps some specific questions that appear during our session. As you are making up your mind, a little short story about me. I'm trading since 2008 and have recently focused on so-called naked trading or trading without technical indicators. This method includes Fibonacci tools that we will examine during today's session. This webinar is the first part of bigger series, building a naked trading strategy that is held every Wednesday. I hope that you find it useful, and if you like it, I will be more than happy if you join us again in a week. As I see, some of you have also got some experience in individual trading. Then you probably know that any winning trading strategy won't be working sustainably without a proven and trustful partner. This is important to be educated not in trading skills, but in trading conditions as well. So please have a look on features offered by Tickmill. If your broker doesn't provide you with such sessions as competitive spreads, segregated funds, and lack of free quotes, you'd better think of it once again. Well, before we dig into finance and forex markets, I would like to give you a short introduction on the nature of Fibonacci tools. Here we've got a picture of sunflower. If you look attentively, you notice that sunflower pieces are in a certain proportion to each other. That is the reason why it looks so beautiful. Interestingly enough, this proportion has exact name, Fibonacci sequence, which was made up more than 800 years ago by Italian mathematician Fibonacci. This sequence appears in many configurations: biological settings, architecture, golden rule of art, and of course, finance. I would like to notice that Fibonacci theory is one of the most harmonic that are used in financial markets. Today we learn what are the implications of Fibonacci sequence in graphical analysis. To start with, the basic tool of Fibonacci is retracement. This is the first point of our agenda, where we review key Fibonacci principles. Afterwards, we are going to learn how to set up Fibonacci extensions correctly. And also, if we've got enough time for our session, I will show you how to mark out significant time periods using Fibonacci theory. As usual, I'm more than happy to show you how to apply Fibonacci tools on live trading, on live charts of selected currency pairs exactly. Back to the first point, which will describe Fibonacci retracement. Fibonacci retracements are ratios used to identify potential reversal levels. 38.2% and 61.8% are most common reversal levels. I am pretty sure that even if you are on the beginner stage, you are familiar with the look of Fibonacci retracements. In case you've forgotten, you can see a screenshot, and in the right side of the screen, you may notice key levels that is better to watch closely when you make up this Fibonacci retracement. In case you join our session for the first time and probably don't know um, the previous sessions from Tickmill, I would like to inform you that previously we had a special webinar that was dedicated exclusively to Fibonacci retracement theme. So in case you are interested to get deeper into this topic specifically, please ask your account manager to give you an access to the recording of Fibonacci retracement webinar. I would be grateful if you find it useful and it will improve your trading. Before we continue, I would like to remind you that in case you feel that you have some points or questions that you need to cover, please ask me in chat. I'm always watching closely chat session, and will be happy to answer your questions. So we are moving forward. From Fibonacci retracement, we are going to Fibonacci extension. The main extension levels start after the price breaches 100% horizontal line, and then the interesting extension point start. The first significant level is 138.2%. The second one is 161.8%. So you can understand. Let's make out some words. Fibonacci extension ratios are produced from mathematical sequence. They reflect projection of following price move to former one. These ratios, also as Fibonacci retracement, reflect potential reversal levels. 61.10%, 138.2%, and 161.8% are most common extension levels. So how does it work? This slide helps you to understand how to set up Fibonacci extension correctly. First point, you need to identify start and close of initial wave. Here you have the chart of euro-dollar 30 minutes time frame, and the thing we are starting with is marked in the upper right channel. Now I mark with the yellow color start and close of initial wave. That would be 0% and 100% subsequently of our Fibonacci extension tool. Second point, we move zero line to the start of the following wave. So we descend a bit the Fibonacci extension tool, and then finally we can watch the lines. You can see that some projections have a certain impact on the look of the chart. I want you to understand this example better, so I would like to go through setup the Fibonacci retracement together with you live. Now I'm switching my screen to live trading chart. Please let me know that you see it. So we're moving forward. As I have described before, this is 30 minutes chart for euro-dollar, and I the selected pattern. We start from the peak of July 10th, which was marked at 1.12.16, and we descend to 1.85 on 12th of July. This would be what we call our initial wave. Then we choose Fibonacci extension tool, and we put it like this. Okay, now I mark it with red color, so you can see the start, the finish of the line, and also once it's a historical chart, you can clearly see there is a beginning of the following wave. What we are doing next is putting the beginning of Fibonacci extension wave to the following peak, like this. And now we are seeing what is the information that we can get from this pattern. First level is 100% level set up at 1.1066, and we can see that this was not quite a signal during the decline. There was a minor pause for euro decline, but it was not significant. But interestingly enough, this level turned out to be quite important during the following retracement move to the upside. As you can see, July 14th, the price has spiked above this 1.1066 level and didn't confirm the breach. It was a typical fake breakout with a long shadow. So it active static resistance. Next line is 138.2%, which is marked at 110.17. Once again, we see that at this moment the price did a minimal retracement, but succeeded to move further below. And second time, this level worked fine as a static resistance during period of July 14th, 15th. Obviously, the most important thing in this example is 161.8% retracement level, extension level, sorry, at the point of 1.0986. As you can see, euro dollar tried to break below this price level for 3 times during July 14th, 2 times, and during July 15th, 3 more times on a low enough time frame. As you can see, it's a good indication of how vital this static support worked out. The that you needed to mark out in your chart is a Fibonacci extension tool, and it succeeded to give you a correct target for your selling and then preserve you from a correction move in the other direction. I hope that this example is clear for you. If you have any questions, please ask me about them. If it's clear for you now, then we can move forward. Just to clarify, here is a depicted chart again. Euro-dollar currency pair, 3 minutes time frame, 161.8% extension at price level 1.0986. Hi, Mr. Novros. Your question is where to get FIBA extension from MetaTrader. Luckily, MetaTrader is a basic account for like a basic platform. It has included the charts. Please tell me if you have got your MetaTrader 4 open at the moment, so you can check it right now. Cool. So please have a look at a toolbar in the upper point. You need to choose Insert tab. Where you click on it, you will find the Fibonacci line, and then you will find 5 different options of Fibonacci. There will be line, time zones, etc. And the 5th one should be extension. Can you see it? Cool, that's it. So now you can test it by yourself. Uh, I invite you to repeat this lesson based on the example of euro dollar, 30 minutes time frame between 10th and 13th of July. So you can follow the same steps, and if you see that result is the same, that means that you are setting up your Fibonacci retracement correctly. Let's move for the fourth example. This time I would like to show you a different time frame. It's a really long-term weekly chart of Australian dollar to United States dollar. I think the best explanation comes from the live explanation. So I switch back to my desktop and we'll switch to AUD to USD. And you will see Fibonacci extension once again, how it's made up live. Obviously, it takes some time. Okay, so we can return to live chart when it's ready. And I will start the explanation on the screenshot itself. This time we are looking at descending move in Australian dollar. Probably the screenshot is has got a little bit low scale, but the general idea should be fine. Once again, I mark the start of first part of descending line and its finish. Based on this distance, we make up an initial Fibonacci extension tool. And then we move the beginning of this extension to the following high, which is marked as red second wave to the downside. Let's see what are the consequences for it. 100% extension didn't work fine in this scenario, probably because it's a different time frame. Still, you can clearly see that 138.8%, 138.2% has shown us some kind of retracement. And once again, 161.8% has given us the highest signal. The price has started a consolidation move in the area of 161.8% Fibonacci extension. And once again, this static level proved actual not only during the descent, but it worked fine also as confirmation for the continuation of the sell-off. So for some time, the price moved above this level during a correction phase, but then it did manage to get back below it, and once the candle closed below this extension level, we can see almost uninterrupted decline to the following static level. Mashfik, do you mean Euro USD or Audi USD? Okay, so let's see if the chart is working fine. I need some more time to upload it, but it should be fine for you. In general, you need to connect the starting point of the wave and the finishing point of the wave. I think I need to restart charts because I cannot really wait for it any longer. Okay, I have got your advice. Uh, Let me show you a weekly time frame, and after this, I promise you that we turn to today's chart. I agree with you that the best lessons can be taught during the actual charts, so you can actually see how it works for it. So, in order to complete the token correctly, we are now at weekly chart of Australian dollar to United States dollar, and I select time frame starting from October 2013. I will mark this as starting point X, so you can clearly see. Then I choose the Fibonacci extension line, and I connect the finishing point of the descending wave with the starting point of the descending wave. Is this move clear? Then I select the created Fibonacci extension tool and move it on the peak of on the following peak. In this current example, it appears to be in June 2014 at the level of 0, 95, and 5. Now we can see what are the signals. So 138.2 signal is 0.7996. It has given us a retracement in January 2015, not so long time ago, and the price succeeded to retrace from the low of 0.8032 to the interim top of 0.8293. So in fact, it has given you 260 pips uprise. Second time this Fibonacci level worked out was during the retest of 0.8 resistance, and this 138.2 extension has clearly supported the importance of static resistance at the state level. Do you get me, Mr. Nouros? Next level to watch is 0.7740, which represents 161.8 extension. First time Australian dollar has declined to it in the end of January 2015, and after that the currency pair has spent 12 weeks, well, 3 months of consolidation trading in the area of 0.7740. This wasn't retested once again. It just given you a clear selling example. As you can see, in June 2015, basically 5 weeks ago, the price has clearly closed below this static level, and after this, Australian dollar continues decline without any interruption. If you are trading Australian dollar to United States dollar regularly, I would recommend you to save this static level 0.7740 as an important one, as I do believe it will give some useful insights in the future as well. Is this example clear to you? If so, let's move to another example. I try to collect clear examples from different currency pairs, so you can confirm that the describing tool is really universal by its nature. It can be applied to multiple currency pairs, to different time frames, intraday, long term. So it's really universal, and you probably can find it. So on United States dollar to Japanese yen, we start with long term again. Here it is already selected. So how can we prepare this chart? We have started with the low of 172 that was marked in May 2014, 14 months ago. And it's quite obvious that it stopped at the peak of 110 and 10. This is how we mark the initial line. Afterwards, we move the extension tool the following bottom, as it's an upside move. I will mark the extension in red so you can see how it works better. 161.8% is a clear rock star. The price succeeded to go beyond it in December 2014 and reach yearly maximum at 121.70. But still, it has retraced back very quickly, and during the second retrace, it was unsuccessful. 3 false breakouts, and the prior descents for 460 pips again. Very interesting price performance is shown between March and May 2015. That was a consolidation period for Japanese yen as well. So the current value of extension projection at 112.15 worked very fine as a static barrier for the upside move. As you can see, once it was broken in May 19th, the upside move has developed very rapidly. I think that you were wishing that you have been using Fibonacci extension at the moment this price move was developing. As you can see, this trading signal is rather obvious and clear to understand. Still, the story of this extension tool, even if it was projected through 14 months ago, remains valid. You can see that during recent decline, the price has almost touched, maybe with 20 pips difference, which is allowable and doable on long-term time frames. This extension tool at 161.8% has worked as a static support level and helps the price in combination with the upward dynamic level to retrace back to the upside. In recent two examples, we have been examining the usage of Fibonacci extension tool on very high time frames. But once we are speaking about retail traders, it's logical to understand, to expect from you that you are mostly focused on intraday trading. By the way, it's interesting for me, what's your regular trading scenario? How long do you stay your positions open? Do you have it open for just a couple of hours? Or maybe you keep it open for 3 or 4 months? Please let me know so I can understand which examples work for you better on intraday or daily and weekly charts. Once again, it's not the last thing to remind you that Fibonacci extension is working equally fine in both cases. As a confirmation, right now you can see on the display United States dollar to Japanese yen, the same currency pair we have been inspecting before, with the only difference that the selected time frame here is just 15 minutes. So the whole picture you're seeing here is just a 3 days archive, which starts from the beginning of this trading week. Still, even intraday charts have got some space for Fibonacci extension tools, and I find it lucky. I won't delete and create it again. I really hope that by the current moment you have already understood how these Fibonacci extensions are drawn. We start with the bottom of 27th of July at 123 precisely, and we finish just 30 pips above 123.30 during the Asian session of July 28th. Here you have got the initial setup prepared. Then you move the bottom line to the minimum level of 28th of July, which worked as a deep correction move. And well, you can obviously see that 123.80 appears to be 138.2% for the pair. Look how precisely this level was tested. It's important for you to understand that by the time this Fibonacci retracement was already created and prepared, you didn't know what would be the target point. But if you had been using Fibonacci extension tool in order to understand what could be the target line, you could be as precise as 1 pip difference, or maybe just a part of pip. I love this chart because it also indicates an important moment about Fibonacci tools theory. Confirmation of Fibonacci level with a different non-indicator trading analysis tool. As an example, descending trend line, rather basic, but they meet on the same level in the same time. And it gives a very correct technically scenario for a downslide. Let me show it to you quickly. So this is the chart I have been describing recently. I hope that you get the explanation. Just to remind, this is a descending trend line, which works as a confirmation. And here selected is the Fibonacci extension tool, which starts from the bottom 123 exactly. Then you move forward once it's confirmed by market activity itself. And then you see this clear projection. Really beautiful, don't you find it? So, Mr. Navros, I think that you're quite active now. Probably you know any exact pair, currency pair, I mean, that you would like to analyze in real time. If you have got any idea or advice or question for the exact currency pair, yeah, like Euro USD current chart, I think it's a perfect choice. By our experience, Euro dollar is obviously the most popular currency pair among retail traders, and hopefully that would be the most relevant information to us. So the chart is prepared. Let's work with it. What I suggest you is always start working from bigger time frames to lower time frames. As you can see, weekly chart is not giving us any exact clues regarding Fibonacci extensions. So we are moving to a daily chart that I would suggest to analyze even on 4-hour time frame. Yeah, maybe it's too busy. It should be fine. All you need is just a proper zoom. So let's start analyzing euro dollar on a daily chart, starting from the bottom of 13th of March of this year. We connect the top of March with the bottom of March. The latter one is the bottom for the whole year itself. Here you see it. So I hope you follow the logic. We have moved the start of extension tool to the following bottom of 1.0520. And once again, 138.2% and 161.8% work very fine as key levels during our trading. The lower level appeared to be very useful during the first test of the upside, and then it was very actual, showing us that the bulls or the buyers are not able to go beyond of it. They did multiple spikes above this level, but they have always returned below it, and that was a clear indication that the downside is about to continue. Regarding the higher line, it worked very nice as a current yearly peak, yearly maximum level. The difference between the projection at 1.1474 and the actual price of 1.1466 is just 8 pips, which is considerable for a daily chart, don't you think? Let's not be in a hurry and pay attention that two other lower levels are also having impact on current trading as well. So what is marked in our chart is 0% is actually 100% level, which has gone a bit higher to the upside alongside with the bottom. And it seems that just 2 days ago, this static resistance was tested and wasn't taken out. So if you are trading euro dollar currently, I would suggest you to watch closely 1.1109 level. Once we are staying below it, it's likely that the downside will continue. Otherwise, we need to see a real close, not only shadow close, but the body close itself for the daily candle above this static line, and it could indicate another leg up to the upside. Is everything clear by this moment? Cool. Now we are having a more detailed picture. This is a Fibonacci retracement tool, which is not relevant for us at the moment. So we take it out. On an hourly chart, there are two options. First, we can try to set up a Fibonacci extension tool based on recent wave, which is very easy to inspect. Then we move the price higher, the price level, I mean. And what we get is a nice projection of 138.2% as a prepared top. And it seems to be that 1.1070 seems to have been missing some. The other interesting point to watch, before we continue, we will mark this extension with a different color so we don't miss it with the other chart that we are going to prepare. I believe it should be fine for now. The other way to unite the candles in euro dollar is connecting this whole level from which starts from the bottom of July 20th, 1.0806. Let's see if it gives us some clues. I'm not so sure about it from the start. We move price bottom at the same level, and we can see that, well, what we can see is that the length of the latter wave is shorter than the length of the previous wave. If you have been watching our previous, if you have been watching our previous meeting, our previous webinar about Fibonacci retracement, you may probably remember that one of the rules about Fibonacci and also Elliott waves is that the third wave should not be the shortest one. So as we can see, this third wave is shorter in comparison to previous one, and it can be an indication that the current local top of 1.1130 would be an interim top, and the price will continue decline. At least this is the lesson that we can get from our cycle. As you may know, Elliott wave cycle, this theory, another important theory to financial markets and intraday trading, is a huge topic by itself. We will definitely come back to it during our next sessions, but I have put this screenshot on purpose because there is a certain correlation between Fibonacci and Elliott. You can clearly see that Fibonacci improves the accuracy of Elliott wave assumptions. So, once we have gone through a few examples, I hope that the idea of Fibonacci extensions has become clearer. Before we finish, I find important to update you on several patterns of regularities, which are not stated in most Forex handbooks, but luckily are visible on your display at the moment. First, Fibonacci tools tend to be not that precise as support and resistance lines. That means they are rather additional than primary tools. The idea that I'm trying to express is indicated on the intraday chart of United States dollar to Japanese yen. Let me return to it quickly, or not so quickly. So, making up in words, the best thing is that the static line of Fibonacci retracement or Fibonacci extension is confirmed with the exact dynamic level of which is marked through trend lines. If you see that these two tools are meeting at the same point, at the same level, that is a much more stronger and reliable signal. Second, when setting stop orders, please pay attention to price measure of an accuracy. Depending on the time frame, you may put stop loss or target point not on the exact level, but 3 or 4 pips below it. And finally, ignore shadow spikes. The values that matter are close ones. You may have seen throughout our session that there were multiple examples or spikes that are marked just with shadows, but the closing levels stay below or above, in case it's a support, the stated static levels. And once you see that there is just a spike and not a real confirmed close below and above this static line, it means that it remains actual. Please let me know if you have got any questions on the current topic, so we can dig into it in a more detailed way. Once you have got none, once you test these tools on demo account, it's time for you to check its performance live. That is the right time when Tickmill can help you. The broker offers you a classic account where you do not have to deposit as much and where the trading conditions are nevertheless great. With Tickmill's classic account, you can enjoy trading with quite a low spread that starts at 1 to 2 pips on your dollar. In addition to this, there are absolutely no commissions attached to this account. This is quite an important feature for the beginners, as it lets them to focus on primarily the market without spending time on calculating the profitability due to the commissions. Well, my fellow traders, next time we meet next Wednesday, it will be 5th of August, to describe and gather useful information about our next topic. I wish you find this session useful and brings you order and profitable balance to your trading strategy. Thanks again for your attention. Thanks again for your involvement, and I hope to see you again. Have a nice trading session again. Bye.